Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on stock splits and reverse stock splits and why a company would do a stock split or a reverse stock split, and I'll give you some examples as well. So the first thing I want to talk about is a regular stock split. This can happen at any time to any stock. And when a company does this, they increase the shares that are held by the shareholders. Now, this can happen if the shares are too high. So a company may decide to do a stock split to make shares more affordable to attract new investors. Now, it's important to remember if you're a shareholder and a company does a stock split, it does decrease the price of your individual shares. However, stock dilution does not occur, so there's no change in the market capitalization. Now, there are several different ratios that are out there for stock splits, but some of the most common are 2-for-1, 3-for-1, and 3-for-2 stock splits. Now, let me give you a hypothetical scenario. So let's say Facebook back in the day. Let's assume that they issued 100 shares at $50 per share. So that would be 100 shares times $50. That would equal a $5,000 market capitalization or market cap. So then let's say they decided to do a 2-for-1 stock split. What would happen in that case is your original 100 shares now would become 200 shares. So then you divide the market cap of $5,000 by 200 shares, and then the price of the stock would be $25. So the shares increased and the value decreased, but the market cap stayed the same. So let's talk about how stock splits work. The price of the stock is lowered and is issued more shares, but the same value the value stays the same. So the price of the stock is lower and you're issued more shares, but you do have the same value. So nothing changes in the value. They increase the liquidity of a stock. So when there's more shares of a stock in the market, there's more liquidity, so more shares to be traded. Now, there are some companies like Berkshire Hathaway that refuse to change or will refuse to split their shares. So they'll have Class A shares, which, that are hundreds of thousands of dollars, and they'll refuse to split them up. They do have like a Class B shares for people for lower classes, but, there's some companies that don't want to do a stock split. They don't want to increase the liquidity of the stock, so they'll keep their share price higher, right? So a couple things, splits might psychologically get buyers into thinking that the price will go up. So if a stock splits and the price is lower, a lot of new investors might think, oh, hey, the price is lower, so it's going to automatically go back up. So it might attract new investors. Another thing it might signal is that, investors might think that management is confident in the future of a company, and then they, attract more buyers. So they'll start to buy thinking, again, if the price is lower, it'll go up. Or if, management's thinking the company will be good long term, so you might as well get in now and invest now before the price of the stock goes back up again. Now let's talk about a reverse split. This is typically used to prop up the stock price since the price rises on a split. So when you're doing a reverse split, the stock rises, so you're trying to kind of prop that price up. And a couple things, a couple reasons why this might be done. It might be used to raise the company profile and respect. It also might prevent the company from being delisted if their price is too low. They want to do a reverse split so they don't get delisted off a major exchange. But you got to be careful because it also might signal something is wrong with a company when they do a reverse split. That's not always the case. Obviously, you have to do your research, but just be careful and do your research when you're looking at companies that do reverse splits. An example of a major company that did a reverse split is Citigroup back in 2011. They did a 1-for-10 reverse split which reduced their share volatility and discouraged speculator trading, right? So this reduced the number of shares outstanding from 29 billion down to 2.9 billion shares. So the shares increased from $4.52 up to $45.12. So every 10 shares that an investor held, they were then replaced with 1 share. So again, reverse splits can be a good or a bad thing. It's just very important to do your research on the company and see what their motive is to doing the reverse split. All right, let's just do some of the takeaways here on stock splits and why they happen. A stock split is issued by the board of directors of a public company. It increases the number of shares in the company. The primary motive is to make shares seem more affordable to small investors, even though the underlying value of the company doesn't change. When a stock split occurs, the market cap of the company, again, stays the same. It can be used to attract new investors due to the lower share price. So again, if investors wanted to get into a stock and the price was too high for a while, and the company does a split and the shares are lower, it may now attract new buyers. Splits also add liquidity, which makes them, attractive or more attractive to other traders. And many interpret stock splits as a sign of confidence for the future of a company. Again, doesn't mean it will. You always have to do your research. But again, there's a lot of psychology behind stock splits, and it's usually a good sign to attract newer or more investors. All right, so if you're new to the stock market, you want to learn more about it, we are a trading community. We are the Bullish Bears. You can check us out below or head over to bullishbears.com. We have some free courses on our website to help you get started, so feel free to head over to our website and check us out and take our courses if you need more help. We do day trading, swing trading, options, futures, all that good stuff, penny stocks. So pretty much a one-stop shop. We like to consider ourselves a one-stop shop in the stock market. So if you want to kind of learn all the major trading strategies under one roof, that's what we like to consider ourselves. Again, just that one place where you can learn everything under that one roof with many different traders from around the world. So again, if you like this video, we'd greatly appreciate it if you give us a thumbs up, subscribe to our channel, and share it out over on social media. So hopefully this video helped you, and we will see you in our community. Enjoy.